Okay, so welcome to today's session. Let's recap whatever we have done so far. So we have looked at different things in the background, like how we can understand the basically how we can understand the market and everything that goes with it and whatnot. So we have tried to look at from that position, but we have tried to understand the balance sheet, the cash flows, the profit and loss, liabilities, asset, and everything is there. So we have tried to learn most of the things by looking at it, right? Now, for today's session, it is going to be very important because now what we are going to discuss is we are going to discuss the valuation of a company. Now, when I mean valuation, so valuation means what price is appropriate for a company itself. I hope I am clear to everyone. Has anyone got any questions so far for the things that I have just said? Okay, so I've got a couple of thumbs up, so which means we are fine. So completely agreed that valuation is going to be one thing which is going to define that at what price that share is actually appropriately valued. Remember, we looked at industry PE versus the PE, and we thought that this is the right valuation for the class for that company itself. So those kind of things we'll be looking too much in the in-depth today. Now let me quickly share my screen with you guys. Okay, I hope everyone can see the screen that I am sharing right now. Can any one of you give me a thumbs up or a yes or anything? Everyone can see the browser, I hope. Okay, so let's move on to the same thing, which is greener. And this time, again, we'll open up the same company, which is, sorry, Vari Energies. Okay, now we are at the same stage where we started 3 or 4 days back. We looked at all of the things for this company. We understood the numbers itself, the profit and loss, what it is trying to tell, the balance sheet, the cash flow, what it is trying to tell, assets and liabilities in detail, how much leverage that they are taking, whatever they are trying to do, we have understood everything from the scratch. Now we have to understand whether at this price currently, so it is trading at 2708, whether it is justified at this price, whether its right price is 2708. For example, let's forget about the stock price right now. Let's forget about the share price. When I say the right price, if I come to you today and tell you that this toothbrush is going to cost you 50 rupees, is everyone going to be okay? Can I have yes or a no in chat? Toothbrush at 50 rupees. Is everyone going to be okay with toothbrush at 50 rupees? Can I get some yes in the chat that we think that this is the fair price of the toothbrush, that it is going to cost us 50 rupees? Can everyone justify with that? Okay, so the yes, I've got 2 or 3 yeses so far, so that's fine. But now, what if I say that this toothbrush, the same, everything same, like your regular old toothbrush, which we have been using since childhood, is going to cost you 1,000 rupees? Is it fair or not fair? Is it like you guys are okay with paying 1,000 rupees for the same toothbrush that you think is going to cost you 50 rupees? Yes or a no? Any yes or any no's? Okay, not fair if doesn't add any value. I am telling you that this is your regular old toothbrush that you buy from Colgate or Pepsodent or Oral-B, your regular old toothbrush. Nothing new in it. So 1,000 rupees is not okay. So we have got a perception for that, right? So we are trying to understand what can we make out of this, right? So now we know that this particular toothbrush is going to cost us 50 rupees and not 1,000 rupees. What if I ask you another question based on the same toothbrush, that this toothbrush is going to cost you only 5 rupees? Will you be happy or will you be sad about it? What are the questions? What are the answers? What are we looking at? Is it going to be 5 rupees? Will you be very happy? Will you be very sad that this is the case and this is what we are going to pay for it? Happy only, right? Because we already thought that it is going to cost us 50 rupees, but we are able to get it in 5 rupees, which means we have actually saved 45 rupees. So it's a better deal. Now, coming to the stock market, exactly the same thing is happening right now. Consider Vari Energy share as a toothbrush. Now, this toothbrush actual price should be around 50 rupees. Whether it is selling for 1000 rupees or 5 rupees or 50 rupees, that is what we have to find out. We know that it is selling for 2708. But now we need to figure it out whether this 2708 is equivalent to 50,000 or 5. So that is where all of your knowledge before this hand has been very understanding, that you have to learn from the numbers what it is trying to tell you. Once you have learned everything from the numbers and you know that this is the picture that is going to be, that you're comfortable investing in, now we have to find the last part, which is the price of the share, whether it is justified or not. Like right now, Vari Energy is trading at 2708. Whether 2708 is fair enough price for Vari Energies in which we can start investing in, or it should be lower than this, or it is already quite high and we cannot buy this. So we have to figure out whether this is appropriately valued, undervalued, or overvalued. That is why we are going to have some calculations today, and we are trying to find out how this should be valued going forward. Okay, fair enough. Simple for everyone. Not quite simple, I guess. Okay, now what we are going to do is we are going to basically analyze this company and try to find the price of it. Now, first and foremost, there is one method which is known as DCF. Now, can somebody tell me how many have you heard about DCF as a method? So nobody has heard about DCF. If I say discounted cash flow, how many have you heard about it? How many have you heard about discounted cash flow or DCF? Nobody. Okay. No methods heard like them. Okay. So we have understood so far that nobody is aware of DCF. Does anyone aware of relative valuation? Like we looked at the other day, we looked at the industry PE and tried to compare the company PE against that. So everyone is completely fair with it, completely okay with it, that they understand what we are talking about right now. So what we are going to do is, in terms of DCF, so I've got another session that is tomorrow. DCF itself is almost 6 to 7 hours worth of topic. What we are going to do is we are going to dedicate tomorrow's complete session to DCF with one example. So that is what we are going to do for tomorrow. We are not going to touch DCF today. So be aware and be ready with some kind of dedicated proper fundamental calculations. So we'll do that tomorrow, but for today we are going to focus on relative valuation. Okay, now how can we do the relative valuation? Now I have got couple of things. I guess nobody will be able to see this right now. Okay, let me change the screen which I want to share. Okay, everyone is able to see the Excel right now, Microsoft Excel. Yes or a no or a thumbs up, anything that I can see. Okay, so it is visible. Now let's talk about Vari Energies. it would be beneficial if you guys can open the Vari Energies on a screener in the background so that you guys are aware that what is happening. But in the meanwhile, let's just try and value this company. Let's try and find out what exactly is going to be the price of this company, right? So let's see. So I've got companies here. I've got PE here. I've got market price. Now I've got Vari. Then I've got Apar and Premium. So at this stage, I am only taking the top three companies and I am assuming that these three companies are the perfect and closest competitor for Vari Energies. So Apar and Premier, I am assuming that these two companies are the closest competitors for Vari Energies right now. Again, there might be different companies which can be the closest competitor of Vari, but for the understanding purpose and for the example purpose, I am assuming these to be the closest competitors. Now, let's just say, so Vari Energies, let's say I have 19.33 as their PE. Then I've got 54.92 and Premier Energies as 28.56. Okay. Market price, this is what I have to find. So I'll put an X there. I know it is trading at 2708, but let's forget about 2708 right now because that is what we are trying to find, that what is the Vari Energies price right now that we should be buying for. Now for the Apar Energies, Apar Industries, it's 16440 and it's 1045.5. Any questions so far? Okay, I don't think so. Any questions will be there so far. Now we have to find this X. What I'm thinking is I am going to allocate the weights of 0.5. Okay, so 0.5, I'm going to allocate weights to these companies. That I think that 0.5 should come from Apar and 0.5 should come from Premier Energies. Okay, everyone understand this part? Now, I have to get close to Vari Energies. Can somebody tell me how we can do it? Can somebody try and tell me that how we can do this? Anybody wants to take a guess with this? Nobody wants to take a this? Guess at this? Okay, nobody is trying for it. Okay, let's quickly have a look at this now. So we have got the PE. How can we do it? Can somebody tell me the formula of PE, which is price upon earning per share? Now I have the price. I can find the EPS which I am trying to target, or I can directly take it from somewhere else. Okay. Is everyone clear with this? I hope everyone has got the answer for this. So we have got the PE for these two companies. I am thinking that this is going to be the rate, the PE that I am talking about. Okay. So again, the same story goes here. Now, what is the total PE? This is the total PE based on these two companies, based on the weights that we have chosen. So this is the total PE. Now, the PE formula right now is equals to your target price divided by EPS. That is your PE formula. Now I have the PE here, 41.74. What am I trying to find? X. And what am I going to divide it with? The EPS. Now let's have a quickly look at your EPS from this particular screener, because we are not calculating at this stage, but EPS right now going on for Vari Energies is 132.68. So now what happens? 41.74 equals to X divided by 132.68. Make sense? Now what happens? What would be my accurate pricing? The relative pricing, it should be 132.68 multiplied. And this is my target price, which is X. What is my current price, which is 2708? Now, can somebody tell me, against 5538 versus 2708, is it underpriced, overpriced, or undervalued, overvalued, or appropriately valued? What are we looking at based on this? Okay, you didn't understand the calculation. Okay, let me make it quite easy and quite open for you right now. Okay, so let me just remove this completely. Right now, I've got the weights. What I am thinking is that Vari Energies is a reflection of his competitors right now. Right now, the two closest competitors that I can think is Apar and Premium Energies. I have given them 0.5, 0.5 as the weight that I feel comfortable in 0.5, 0.5 as the competitors weight altogether. That Apar represent 50% of Vari and Vari is represent 50% by Premium. So I've given them weights of 50-50%. Now, in terms of what is going to be PE multiplied by weights. Why we are doing this? Because we have to take the average of this. And we are taking average of Apar and Premier PEs to reflect what Vari Energy PE can be. Forget about 19.33 right now, which it is standing at. Just focus on this part. This is the PE that I am thinking that this company will have based on the competition itself. Now I know that this is the Vari Energy's expected PE. We all know that PE is equals to target price divided by earning per share. We already know the PE that we have calculated based on its two competitors. Now that is already we have inserted there. We assume that the share price, the target price or the share price of Vari Energies is X, because that is what we are trying to find out. On the other hand, it is going to be divided by EPS to come at 41.74. Now the current EPS of Vari Energies is 132.68. Whereas the PE based on its competitor is 41.74. So 41.74 equals to X divided by 132.68. And you'll just take it on the other side and multiply it, which means the share price, the expected share price based on the two competitors' PE ratio is going to be 5,538. Now, if we have to compare it against 2,708, which is its current price, what do you think? Is it overvalued, undervalued, or what are we looking at? Or appropriately valued? It's 5,500 versus 2,700. Undervalued. Yes. Why it is undervalued? Because based on the two competitors' pricing right now in the current market, our value of the company is very less, sitting at 2,700, which is almost half of what we are expecting its price to be. Okay, everyone clear with this? Anyone has got any questions? Okay, let's move on to the next side. Now, these were the two competitors that we thought about, right? Yes, Parth, I believe you should be able to unmute yourself. Are you not able to unmute? Okay, let me quickly unmute you. So,
Hello, sir.
Yes, Parth, you should be able to unmute now.
Hello, sir. I am asking that we have only taken two competitors right now.
Yes.
So, isn't it unfair value because only two competitors we have taken?
You can take 3 or 4 competitors, whatever you feel comfortable with. That is why I said at the start that for this particular example, what for this particular calculation, I am just using two of the top companies from the list. They might not be even the closest competitors. The closest competitor might be MTAR or any other company. It's just for this particular example. We have chosen those two companies which we have been looking for last 3 sessions. So
So,
next
means out
example,
of this, so
sorry.
means we interpret that out of these three companies, Vari is undervalued.
No, 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 no. So we have interpreted that Vari's valuation, Vari's share price is 5,500 based on the PE value of its competitors.
Okay.
Because we already know Vari Energy is selling for 2,700. But do you know whether it is rightly priced or overpriced or underpriced? For that, we need
Hmm.
to see some kind of benchmarks or some kind of industries or some kind of competitors in the background, right? To come up with the
Hmm.
valuation.
Yes.
So this valuation is coming from coming from by looking at its competitors, not from Vari itself. DCF, when we talk about DCF looks into Vari itself, but we are talking about relative valuation today, which comes from its competitors or its industry.
Hmm.
So we talked about okay, let me put another example in this. Now we talk about the industry altogether. Okay, we can use this number as well. Now we know that industry's PE is 30 point, wait, let me just go to that. So it's 30.57. Okay. So this is what we have got as industry's PE. Actually, I put it in the wrong place. So 30.57. Now, if I'm not considering anything else, I'm not considering, so I'll give it 100% weight. And this is going to be your expected PE ratio for Vari Energies. Now let's follow the exact same step, right? If we follow the exact same step, this time my PE has changed from 41.74 to 30.57. But my EPS still remains the same. So 30.57, because this time my comparison is with the industry itself. And 132.68, which is going to give me X. And this time my valuation has changed from 5,500 to 4,100 to 4,000. Can you see the drop? Why this drop is there? Because I have changed my criteria on which I am going to calculate Vari's price. So whenever my PE changed, my Vari price is expected to change. Now, which one I'm comfortable with, that is my personal call, which you should be taking. You'll get used to over the time that whether I should be looking at 3 companies or 4 companies as a proper competitor and get to know the pricing of it, or I am fine with that industry level where another 30 companies are part of this particular industry, and then it is giving me a fair value. But that is how your relative valuation works. Does anyone having any more questions on this particular industry PE or the PE itself? Any questions, any thoughts now that we have looked into this? No questions, no problems.
Yes,
Okay.
sir. No questions now.
Thank you, Parth. So I understand that everyone is basically clear on this and they are following it along. Now, this is one aspect that we can follow, right? This is one example that we have seen so far, that is PE. Now, let's go to another one. And this time, instead of PE, what we are going to use is we are going to use PS. Now, can somebody tell me what PS is in the meantime? Can somebody tell me what PS is? Nobody wants to take a guess? Okay, PS is price to sales. Now, can somebody tell me what price to sale represent? Maybe just type in there. Okay, nobody wants to type, so let's have a quick look. Now, this time, instead of PE, I have changed the numbers to PS, which is price to sale. Again, this is another benchmark which we can start using while doing a relative valuation of a company. This is fairly simple to follow because we have followed PE before. Now, this time, PS is equals to price divided by sales. Very simple. In this case, you have to be very careful about one thing, that is, this sales and this price should be either, okay, let me write it here, per share and sales per share. If you are not using this, if you're using something else, then it is something like market cap. If you don't want to include anything from here, so market cap divided by total sales. So they both are same thing, exactly the same thing. Only difference is that this one is divided by number of outstanding shares in both the cases. This one is not. So you can follow anyone along and you'll still get the same answer. It's just your personal preference, which one do you want to take. Now let's have a look at Apar Energies. So Apar Energies, I know that its PS is 2.71 right here, and their premium energies is at sitting at 5.6. Now I again want to keep it as it is. I do not want to change the weights right now, just for the example purpose. I'm happy with 50-50% having them both, and this time my profit to sales is 4.155. Fairly simple. Now what I'm trying to find is X. I'm trying to find the X. I am going to consider per share price in this case. Okay. I am going to consider sales per share so that I don't have to divide the market cap by number of outstanding shares at the end. So I'm doing it beforehand. Now, sales per share. Let me see what the sales per share for them is. They are making a sales of 26,537. So that is their sales. And number of outstanding shares that they have are, sorry, actually I'm looking at the wrong company. Just bear with me. So we'll go to Apar Industries. No, actually, I was looking at right. So sales that Vari Energies is making is 26,537. It's the same one. And I need to know the outstanding shares. So number of equity shares, there are 4.02, which is this is 26537. Actually, instead of this, let me pick the market cap, which I can change it later. So 78801. Now, let me take total shares here. So 4.155. I can find out the per share one later. So this is total sales that we are talking about. Let me change this for the confusion of it. 537 and this is my total sales. Okay. Now, if I have to find out when we are using total sales, I have to find out the market capital. So 4.155 multiplied by 26537, which is somewhere around 1,10,267. Now I have to divide this by a number of outstanding shares, and the number of outstanding shares for Vari Energies is somewhere around 28 lakhs. If I'm not wrong, just bear with me. Let me quickly confirm. So 28 lakhs is the shares that are not 28 lakhs, wait. 28.8, and you have got current price. Just bear with me. 78807 divided by 2705. That is crores. So let's multiply this with crores. So these are the outstanding shares. And if I'll divide this by this, and actually I don't need to do that. So your outstanding shares are 28.8. And all I have to do is just divide this by 28.8, which is the outstanding shares. So based on price to sales, my current price for Vari Energies based on these two companies as the competitor is 3828. Okay, let's quickly do this calculation for the industry itself. This time, what my calculation would do is 2.5 multiplied by 26537. Again, what we are going to do is we are going to divide this by 28.8. This time it is coming at 2,303. Now, can somebody tell me against its own competitors, the two competitors that we have chosen, is it underpriced or overpriced based on price to sales? Can somebody tell me against price to sales, what is happening? The price of this company to the Vari Energies, is it underpriced or overpriced? Appropriate. So basically, Parth, if you look at the Vari Energies current price, it's 2708, which is against 3828. So is it appropriately priced, underpriced, or overpriced?
If we compare it to 3828, it is underpriced.
And what about if you compare it with 2303?
It is overpriced.
Yes. So now which one would you choose? Because in PE, both the things were overpriced, were underpriced actually. Because if you look at the Vari Energies prices against PE, they both were underpriced for Vari Energies. But this time one is underpriced and one is overpriced. Now we have to choose which one we are comfortable with. That is when your prior knowledge comes in, where you feel comfortable in picking one of this number. Which one do you want to account for? But this is not the end. Now, what we have done so far, we have understood that there are two parameters we have done the two relative valuation based on. But this is not the end yet, because based on PE valuation, I can see that my valuation for PE based on its competitor is 5538, and PS against the same competitors is 3828, right? Another set of PE and PS based is 4056 and 2303, which is for the industry level analysis. Now, what I'll do is basically I'll give them the weights again. because I do not want to base my price based on just one factor, that is either PE or PS. So I've picked two variables based on which I'm going to justify my pricing for this company. Again, the same story goes. I'll try to find the average of this and tell you that this is giving me 4683. And if I do the same exercise for this, at the industry level, my pricing combining PE and PS is 3179. Whereas at the competitor level, my pricing is 4683 by combining PE and PS for the same industry, for the same competitors. Now, I am at a position where I can say that I can finally compare my actual price of Vari Energies with this two. Based on these prices, finally I can say that Vari Energies is underpriced against its competitors, and Vari Energies is underpriced against the whole industry. Am I clear? Anyone having any questions based on this? Anybody having any questions so far on this? No questions, no problems. Okay, so now all of you are clear on this. Let's do another example of this. Let's pick another company. Let's do another example so that you guys get more clarity out of it. Can somebody suggest me any company name? Again, don't pick two random companies. Give me a little bit of good company. Does anyone has any company in their mind which we can discuss and we can do a quick valuation for the relative valuation that we have just done for Vari Energies? JSW Energy. Again, it's the same industry part, so not very keen on the same industry. Any other industry that we can target? Should we try Eternal if everyone is okay? Everyone okay with Eternal? Everyone remembers Eternal, right? Eternal is Zomato. Okay, let's quickly go to Eternal. I'm sure you guys are not able to see my browser, but I am opening everything in a screener right now, and I'll be taking my details from there. So if you can open that in the background, that would be a lot helpful for you guys as well to follow along the numbers that I'm taking. Okay, so quickly have a look. Now, if we talk about the PE, in terms of PE, so there is one problem that I'm facing. That is, it is only giving me a P for two other companies. One is FSN e-commerce and the other one is car trade, but not for the other companies. So I won't be able to use the PE properly, but it would have been a good example. So I'm going to skip Eternal. Let me think of another company which I can use is which is trading high at current stages.
Sir,
Yes.
sir, I just have one question in that. What 28.8 outstanding shares?
Hmm.
Is it 28.8 crores or just 28.8 something?
So it's 28.8 crores because if you look at your market cap in the same table upwards, so you can see the market cap is lakhs and then it says crores afterwards.
So we just divided it by 28.8 directly, no?
Yes, because we haven't multiplied the sales number by crores.
Yes.
So we have kept everything at the same denomination so that we don't get confused afterwards.
Yes, yes.
Okay, so let's try persistent. This might be the example that I'm looking for. Okay, let's talk about persistent energies. Let me see. Yes, I finally got all the PEs and everything for this particular company. Now, let's have a quick look at persistent systems. Now, in persistent systems, I've got I'll take three competitors this time. I'll take TCS, Infosys, and HCL. Okay. So I'm going to replace the numbers in the same. So this time it's going to be TCS, Infosys, and HCL. Okay, now this time 0.5 will not suffice. I have to take 0.3, 0.3. So I am assuming that I am giving every single company the same weights at this stage. But again, as the thing goes in future, you can change all of these things going forward according to your own understanding and how do you want to do it. So let's say the PE of TCS is 16.4. Infosys is 15.41 and HCL is 20.43. Okay, so I have been able to find and here as well this multiplied by, okay, I'll just change the EPS figure right now. Just bear with me. Let me get the EPS figure. So EPS currently for persistent is 122. So I'll change this. So my fair price based on the PE of three competitive companies right now is 2131. Whereas the current price of this company is 5435. 5435 is the current price. I'll highlight in a different color. And this is what we have been able to get. Now let's have a look at the industry PE. The industry PE is standing at 22.34, and all I have to do is 22.34 multiplied by 122.18. Now this is the price that I have got according to the industry standard. Okay, but my current price is this. Now quickly let's move on to the sales price. So it is going to be price to sales. Let's try to quickly calculate this. And TCS price to sales is 3.19, 2.6, and 2.76. My weights will still change. 3.3 and 3.4. So I've got this, and for industry level, it is sitting at 3.18. Now I've got both the numbers here. What I am going to do is do this, make the adjustments. This time, my sales has also changed. What is my sales for this? My sales for this particular company is 14,748. Okay. So this is going to be multiplied by 14,748. And my number will also change. My number of outstanding shares are 15.8. Now, the price that I've got is 2659 against 5435. Let me highlight this again. And as for against the company itself, the industry itself, 14748, my price is 2968.268. I'll change this again, these numbers, to basically carry on with the calculation moving forward. So PE based on competitor is this, PS based on competitor is this. Now, PE based on industry is this, PS based on industry is this. I can see finally I've given them as the weightage of this. This time I'm comparing it against 5435 and 5435. Now, can somebody tell me whether this is overpriced or underpriced at which level?
Overpriced only, sir.
So it is overpriced at PE and PS combined at industry level, and PE and PS combined at competitors level. Are we clear on this? Have we got any questions based on this?
No, sir.
It takes only 2 minutes, and if you can make a dashboard like this for yourself, all you have to do is just change some numbers, and you will be able to get your valuation within 30 seconds or maybe a minute. Whatever time it takes to just plug in the amounts or the numbers that you're looking forward to calculate for, and you can compare it with n number of companies, n number of times. But you have to understand which competitors you are going to select and why the industry numbers are important, what kind of role they play in the company itself in terms of their valuation. So this is what we call as relative valuation. We have only picked two variables right now, PE and PS. There are other variables as well. One is price to book value. You can use that as well. One is enterprise value divided by EBITDA. You can use that as well. You can increase the number of ratios that you are wanting to include and do a relative valuation against, but it should be based on a price or something like that, so you can get the actual value for that matter. So the other one is price to book, one is price to sales, one is price to earn EPS. So these three you can use in combination for the relative valuation of any company against its competitors and against the industry itself, and come to a price which is fairly valued. So based on this pricing, you would feel that persistent energy is very expensive, and actually you would wait for this price to come before taking the entry, because if you buy it right now, it might be too expensive for you to bear the losses if it drops. Sir, can we take sales of last year to compare whether the price has changed or not? Okay, there is a problem with that part. The problem with that is there are market sentiments also factored in when we look at the market price. Right now, the persistent system is trading high because of the market sentiments that the shareholders are having for this particular company. That is what you have to understand and combine these two factors together. So if it is already double the price of this, even though if I'll take the old share prices, like the old sales of the last year, it still might come as heavily overpriced. Why? Actually, let me change the screen that I'm sharing with you guys. Bear with me. So if you look into this screen now, the very basic, the PE of persistent system is already 43 against 22 of its industry, which is almost the highest within these 7 companies right now. Doesn't matter if I'll take the sales of the last year, which is 11,939, it will still be expensive, because my last year pricing would have taken that impact, and last year pricing would be almost on the similar grounds, which I can see from the chart that from 12th August 2025 it was trading at 5,232, which is literally the similar price that it is right now. And at that stage your price is also at the same stage, and your sales are a little bit lower, but your PE would remain the same, which means that you are not at a good level of pricing in terms of persistent systems. So they are always overpriced. So even at this stage, this you can see fair value PE 2729. And the Excel that we have used also gives us almost a similar number as compared to the screener. So screener is also using the similar model. You can use these numbers as well for the reference, but before starting to use these numbers, you should be able to calculate based on by yourself, because if you're not able to calculate it, you will never be able to understand what and how this fair value is coming from. Okay, I've got another question. So persistent overpriced means there is a risk of price falling. Yes, there is a definite risk of price falling because it is quite overpriced at this stage. If I'll consider market sentiments, it is still trading at a double of what it is expected to be traded at. So personally speaking, again, this is not something that I recommend. This is not something that is a recommendation or an investment recommendation. This is purely for educational purposes. But personally talking about me, I am not at all comfortable taking a position at 5,400. Whenever it is sufficiently valued, then I will be taking a position in this or think about taking a position in this. Or whenever it is undervalued, it might go sideways from here and trade for 5,000 or something for another 2 more years, because since last year it is trading at a similar price, as we have already seen that in the chart. So based on this, they might still trade at two like 5,000 or something level for next 2 years before they start going to go up. But in the meantime, in those last 2 years, the 2 years that are going to come, their sales will increase, which means that their valuation should be increasing, but their valuation remains the same somewhere around at 5,000. And after 2 years, their fair value would be at 5,000, and that is where they are trading at. So I will be looking at that type of scenario. It can come within the next, let's say, 1 week, because it can fall down to 27, 2,500, its fair value level. Then I can look forward to take position in that if I am okay with it. So there are a number of cases when it can come to the prices that you are looking forward to take within a week, or if nothing else, it can take another 2 or 3 years to come at that level, or the company has grown to that level that finally the share prices justify the business that the company is making. Right now, for persistent systems, it's not making any sense. So I am not at all comfortable going ahead and doing anything for this company. Okay, so we are at the last stretch of this session. Can somebody tell me if they are having any more questions or anything they want to look at quickly in next 2 minutes? Do we have anything more to discuss about? Does somebody wants to ask anything, or this is completely clear? Can I get a thumbs up or a yes sir or anything of that sort, so that I know we all are on the same page? But sir, if we compare it in 2027 and if it is increasing, would you be interested? Again, I will reiterate the same thing, that in 2027, I can see that they have got the growth prospects. They are basically making sales. If you look at it here right now, their sales has been increasing. So you can see that their sales has been increasing year on year at a good rate, even though in next year it is expected to grow. I can already see in TTM, but their pricing is extremely high to not account that in when I am going to take position in this particular company. Because right now we are talking about double the price of what it is trading for, based on you are getting almost 20% as an increase in your sales, but I'm paying double for what it is valued. So that is what I am not comfortable with, because for 10%, 20% of growth, why would I have to pay double? So that is where I'll refrain myself. Even though if they are increasing and they are got good numbers coming up for next year, but still they are only showing me 20% of growth against the double of the price I am paying. So that's not something that I would be interested in. The same example for toothbrush. We talked about that 50 was its fair value, but are you willing to pay not 50 but 150 for the same thing? No, right? Because you are thinking that its value is only for 50 rupees. Why would I pay extra for that, and that too by 3 times? That is exactly the same thing when we are looking at this share price. I hope that answers your question part. So any other questions from anyone who wants to just put it out quickly in the group, or we can have a look at it, something like that? I wouldn't comment on this because there are lots and lots of different market sentiments that goes in the. Yes, your thought is right. I am not saying that your thought is wrong, but people in market are generally not very open to thoughts like this. They think that they know better, and that's why many of the people who are trading, that is why I said we are going to learn to invest, not trade. That is why whoever is trading is always making this kind of mistake and making losses rather than making money. So that is why I always prefer investing as compared to the trading. But that's all good. So finally, we are at the end of this session. Tomorrow, we'll be looking at DCA for the whole 1 hour. Try to cover as much as we can. But thank you for being here, and looking forward to see you again tomorrow. Thank you.